afternoon. Welcome to Chicago, Future of Finance. I'm Oliver Renick. We're live here from the Cboe floor in Chicago, where VIX is spiking. Volatility's up, stocks are down. We're getting hit fairly hard. It's overall not a good day. Just a lot of things moving quickly in the wrong direction. Mainly, you have a highlight in bonds, which we're going to talk about. The 10-year yield is spiking and moved through 4.2% last Friday. That's the spot that I was a little bit worried about. Brent Kochuba at Spot Gamma was worried about vol catching up and VIX spiking. Now, if you look at the charts, the big thing that I think is really important here, obviously, is one, the break through the 10-year yield. Obviously, the red line there has been an important line in the sand that is getting broken through. That's a pretty big deal. That was the main thing that I talked about in terms of being maybe a macro risk. You can have yields moving up for good reasons, good economic data, which I think we've generally had, but this is not really the right reasons. How do I know it's not the right reason? Because you've got the dollar down substantially today. Now, the dollar's generally been range bound, and it still is within familiar territory. But yields up, dollar down is one of the worst combinations in my mind about the macro political message, and there certainly is some political tension in Davos as we prepare for the president to speak about kind of firing things up with our European allies. So I'm not really worried about the whole Greenland thing. I don't think it's that big of a deal, but when you combine it with some other things that are happening generally in the market, you are starting to see a little bit of a response. What's important about these moments is that we learn from them. And one of the lessons that's very important to have really just ingrained in your mind now is that crypto and Bitcoin is not a hedge to political instability. It is a risk asset. It remains a risk asset, and it's getting hit the worst today. Now, nothing's changed on my risk radar in terms of the actual yellow light for crypto, because I think it still is range bound as Bitcoin has been basically below 100K. I was looking for it to get to 100. We got to 98. So overall, I think it was the right move to have the yellow light on crypto and Bitcoin instead of red. But today's pullback certainly pushes Bitcoin towards the lower end of the range, and you need to be on alert. However, there are two important changes to my risk radar today, and the first is bonds and stocks. But let's think about bonds first, because the Treasury market blowing through that 4.2% is a big deal. It had been holding there for a significant period of time. And when you have a line like that, that if you go back to August, was yield support there, and then it was yield resistance there in September, and then again throughout basically the entire last month and a half, this was just begging for a test, and the test failed basically this time, and finally you get some energy to release to the upside. Now, that being said, if you look at the backdrop, we were just at all-time highs in the S&P 500. The economic data has been coming in pretty solid. There's not a lot of signs of real material slowdown. The economic numbers have been okay. And that basically tells us that there are some good reasons to maybe have yields moving higher, especially if we're going to be having a Fed that's going to cut. That might sound a little bit ironic to some extent, a dovish Fed meaning higher yields, but keep in mind that's something that I specifically discussed over the last 2 weeks with our guests, is that if you're going to have someone coming in to take over from Powell who's very dovish, which is, by the way, the politicization of the Fed, which is maybe another reason why the dollar is down, then you have a pretty good reason for yields to go up. Is it chaos? Is it bad? I don't necessarily think so. But I think we also have to be aware of the fact now that the S&P 500 is putting in slightly lower lows on the chart. You can make a little line here that's pretty easy that gets us to where we are right now at 6,800, that goes back to late December. You can see from that gap up from December 19th to 22nd, if you start your line there, you've now got 1, 2, 3 arguably lower lows on the chart for the S&P 500. So for that reason, that's why I've also now got stocks yellow on the risk radar as well, because you do have generally a bit of a situation when you're making lower lows. The other thing that might be a small problem for equities, generally speaking, is the fact that tech just has been stuck going sideways for some time. That's the other thing that's notable here. If you look at the MAGS ETF as an example, we're sitting right at the low end of a range that I've been watching very diligently here, now at 63. This, of course, is the MAG 7 ETF. It's been sideways. If it breaks down from here, that's a problem, obviously, because when you have a concentrated index, you want to see your leaders moving higher or at very least going sideways. So the Mag 7 potential for breakdown here is a bit concerning. We don't want that to happen. The other thing I would point out is that the NASDAQ too, if you broaden it out just to look at tech in general, this is important as well. We never made a higher high. While we did it in the S&P 500, what we saw is decreasing higher highs. So you've actually got lower highs for the NASDAQ going back to October. Now, by the same token, you actually have higher lows as well. So I'm not super concerned about this chart just yet, but it is call for at least some recognition that equities are buckling somewhat and might have a little bit of a tougher path to go here just in the near term. So the conclusion then for now on the risk radar is yellow for stocks, yellow for Bitcoin and crypto. It's red for bonds because now it looks like we're releasing energy to the upside in yield, downside in price. And for the dollar, it's still yellow because the dollar is largely still range bound. So let's talk about something that works. And that, of course, is the precious metals. And it's gold. And it's silver. It's gold, Jerry. This is extraordinary. Now, there's something to be said here, very much so, about trend, but also news flow as well. You hear a lot from the coiners about how they're the solution to political mismanagement and chaos and debasement and all these things. But what we see in the evidence is that Bitcoin is still very much a risk asset, moving downward on down days for stocks. What we've learned for gold is that it works in a lot of different environments. With a fresh breakout today, it's one very clear trend higher. One of the reasons why it's basically been the only steady green light on my risk radar for months, I think maybe over a year now, basically. So this is telling us really that gold is definitely the chosen asset for hedging kind of all forms of risk. Now, we did have a little bit of sideways period early last year in the spring. Anytime gold has moved anywhere but up, it's only been sideways. This is just an absolutely beautiful chart that really is something to behold. Silver too, by the same token, a little bit more of a riskier version of gold perhaps, but the fact that folks are trading it up today tells us speculative appetite certainly is still there, and that gold and silver generally have been the strongest trends to get behind. It's something we've talked about with Pete Najarian, and we've talked about it with Brent Kochuba as well, the strength in silver and the momentum and the flows that are still behind it. So overall, it's a pretty great looking chart, and my conclusion for the risk radar is that we should be holding gold green, as it is really the life of this market and the most reliable thing that we've got right now. Monitoring VIX and volatility as the S&P 500 right now on the index trades at 67.80, just below it. We'll be right back, 2-minute buffer break, and we'll get it going.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovator's floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
right, welcome back here. We got stocks trying to hold in, but we are definitely getting hit pretty hard, down 2% right now, and VIX is moving. Right now we're at 20.69, just below the high of the day for VIX, which is at 20.99. Mr. Pete Najarian joins me from Market Rebellion. Pete, good to see you, sir. We're getting finally whacked a little bit here. Let's kind of start with the basics. VIX moving to 20 certainly looks big on the candle, but we've also had really muted VIX for weeks.
Yeah, the VIX has been, as you know, I mean, you've been watching this just like I am every single day. I like to see where it is. I look at two things. I look at the 10-year and I look at the VIX. Those are the first two pathways that I want to see in the early morning. And the fact that the VIX finally did get up here over 20, it did pull all the way back as well, though, to be honest with you, Oliver. That was pretty interesting. The fact that we actually went negative on the VIX for a little bit there. But the direction's definitely clearly going to be higher. And when we see what's happening with the markets, it makes a lot of sense. The S&P getting beat up pretty good. The Dow down significantly, down 700. Obviously, the NASDAQ getting slammed pretty hard as well. So the three major indices. And here we are pushing towards 21. Is that the worst thing in the world? Absolutely not. But is it something that I think that we have to keep a note of, that it's not, it gave back early, but the fact that it's kind of holding on and actually going up here towards the end of the day, that's something that I think is a little bit different than what we've been seeing for most of this year. Just the fact that we're going to probably, from the looks of things, maybe get up towards 21 or maybe even a little higher than that. And we have had some option activity in the VXX. You and I talked about that last week. We haven't seen as much recently on the VIX itself, but that VXX, we talked about it last Tuesday, I think, and we had just seen some very interesting option paper in there, short-term volatility trade, and they already got a nice hit already once, and it looks like we're going to get another batch of that, making that a little bit better even again.
The creep in VIX has been there, right? We've had it since December. We've talked about it on this show where stocks were climbing, staying firm. S&P 500 was just marginally, inching to higher highs. But volatility has been creeping. So even though nominally it's been low, we've had a little bit of some kind of buildup to this, Pete. And I think that's interesting because it might suggest that we just sort of needed to puke a little bit because there was a lot of single stock volatility in places. We talked about dispersion and some other metrics. So maybe this is just kind of a culmination rather than the beginning. What do you think about that?
Yeah, I think that makes some sense. I mean, given what we are seeing in the markets and some of obviously what we're hearing from the president and all of what's going on now, I mean, is this Liberation Day all over again? No. But is it something that we need to see if the markets are going to get calmed down just a little bit from where we have reached up to today? A lot of that's going to be very, very dependent on how things are handled, I think, going into the future here. And, a lot of people are pretty nervous about some of the strategies that are being used for this whole thing with Greenland and so forth. Is it going to have any legs? And if it does have some legs and there's some pushback going on over, obviously, in Europe, that's going to give this volatility a nice, solid lift. There is no doubt about that for me.
Yeah. To the point of the sort of political angle here, I generally am of the view that geopolitics leading to sell-offs are the most reliable dips to buy. However, I will say there are some things that I particularly don't like in today's session, Pete, which is dollar down, yields up. Yields up, dollar up is a great trade and message because it tells us the economy is strengthening, U.S. is getting more edge. Yields up, dollar down is more like maybe we don't trust these bonds or this government.
Yeah, I think you're exactly right. And meanwhile, we're looking over at Japan and we're seeing them get a little bit stronger and moving in the opposite direction. So, the bond market is an interesting one. You've got these various yields. You've got the bonds going a little bit lower and less demand and all of this. And, there's other factors as well that are out there. I mean, you and I have often talked about different things in the world of crypto. I find that very interesting as well because they're getting hit pretty hard today. Why are they getting hit?
Smoked?
It's because of the risk that's involved there. The risky assets are going to have less attractiveness in a situation like what we're dealing with, I think, right now. And could that get cleared up pretty quickly? It could. We saw exactly how things played out a year ago, April. that it took a little, a few days, but not much more than that before we started to see that big turnaround after seeing markets that were getting slammed. And I'm not trying to compare it necessarily to that. I don't think the markets are quite in the same spot, but they possibly could get there if the president decides that he's really going to go all in on this Greenland and some of the tariffs that he's already talked about with some of the Europeans.
It's a real probability. I'm pulling up the numbers right now from Kalshi. Will Trump buy at least part of Greenland? By the way, this is also on some of their most actively traded contracts today. It's right there. Will Trump buy at least part of Greenland? By the way, it's at 42%. So, I mean, I don't know. That's not low, Pete. That's not low.
No. And that, I think, for me at least, is a little bit concerning, right? Because I think that is something where if we get to that point, we get that far, I think there's going to be a lot of pushback from coming around from the rest of the globe. So is that going to be something that's going to, affect the markets? I sure think it could. And it puts us back into that position like we were nearly a year ago. So it's interesting. I'm a little bit surprised that it's that high, quite honestly. But it's all in the presentation and what does it really look like, and the aggressiveness that the president, at least so far, has shown that this is the possibility of this. I don't know. What I don't understand also, Oliver, quite frankly, is I just don't really get the advantage. I can see where the president is on many different other issues, but on this particular one, I don't know that we have to go into this whole purchasing of Greenland idea. I think that, are they friends? They seem to be, pretty friendly towards us, right? I mean, they're not pushing all over the place on us. So I don't know.
Kind of a non-issue, to some extent, I would think. But I guess it's just, putting our European allies in a tough spot, I think, basically, which is like, now we got Europeans like sending troops there. What are we going to get in like it's just, I don't know. My gut wants me to, make it a small thing and laugh about it. But who knows? Yeah. Who knows what's possible? Yeah. But obviously with Davos too, the timing, I think it's just a little drama, and maybe we needed a reason to puke. But I mean, you can see the odds going up. And by the way, the Kalshi is before 2029. This one's at 46%. So for just taking part of any control, I mean, it went up substantially the last month or so. To your point, so maybe it's not a joke.
Yeah. Let's hope that we can get things kind of ironed out and get back to the markets the way they've been playing out. And obviously, we started earnings season basically in the last week or so, and we're continuing to get further and further along with the earnings. And we've got less in the financials, although there is quite a few of those regionals and so forth that are standing out to me as far as as I'm going through all the various names. But you've got 3M, you've got Netflix, you've got Interactive Brokers, you've got a lot of different names. Yes, the regionals are there too, but you've got J&J, you've got Schwab, you've got Halliburton and GE. So it's another very, very big week of earnings of some big major companies as well, which I think, oftentimes that can be something very, very positive if indeed some of these folks are doing as well as maybe many people think they are.
3M got smoked after being in the midst of somewhat of a recovery trade there for the better part of the last year. It was a dog for a while, but then had a nice run in 2024, earlier this year too. You've been trading this, Pete? Because the trend has looked pretty good.
Yeah, I have not, quite honestly. I mean, I think I like 3M. It's right around the corner from me, Oliver. I literally could be there in 10 minutes from my house, but no, that's not one of the names. I find myself in a lot of various names throughout, different sectors and so forth. 3M, just because it's in my backyard and I do know certain things about things that they've been dealing with for a time frame or two. I just have stayed away from that particular name. Doesn't mean it's awful or anything like that, anything of the sort, but I think that there are better opportunities out there in some of the other stocks that I seem to be more often in. And I'll tell you what, and I know you and I will get to it, but gold and silver, it's just amazing what's going on. And I'm not saying we have to go there right now, but
no, I'm working my way there because we got Freeport which is part of the metals trade. I was going to go into it through the earnings route because Freeport's got earnings this week too, and that's copper obviously, but other stuff too, right? They mine gold as well, and that chart, I mean, a couple days of consolidation, maybe there's a play there, or would you rather just go straight for the literal gold, the stuff that's been doing so well?
I don't mind doing all of the above. I like gold because all we see is GLD hitting almost every single day. I mean, I you know, you and I have talked about this one, but literally 5 hits we got hit last week on Friday. You know how many we got again today? About another 5 hits on these GLD. It's amazing. And today we've had 3 GLD hits again, unusual option activity. One of them, 112,000 options trading on the 440 line of expiration on the 30th. So these are not just small trades. These are massive trades. We had another 56,000 of the Januaries that expire this week, actually, on Friday, the 435. So there's still an appetite out there right now, Oliver. It's absolutely amazing. And by the way, we started to see a little bit more coming from silver today as well. SLV is the venue that they want to use. And it's been really, really interesting to see that suddenly, you know, silver popped up once again. Now, silver's been hitting time and time again, and some of those different miners, absolutely, they've been phenomenal. But you know, we also have Alcoa at the end of the week as well. I think it's the same day as Freeport. So yeah, we've got some of those kind of names. I love Freeport. I think that they are in a great spot, and because of that, I think that where they are, and you know, we don't probably give copper its just due in terms of what that's happened, and I think it's only because it's overshadowed by gold being a freak show to the upside.
That's right.
and silver as well.
I like the way you put that. Gold is a bit of a freak show, man. There's not a lot else like it out there right now. Just the consistency of it, the reliability of it, the massive candle today on it. The fact that, so they were buying the strikes at 440, which is, we were really kind of flirting with that early at 439. So that's not too far off.
No.
I mean, especially after we had 4 days of going sideways around 420 and a little chop between 400 and 420. It kind of looks like one could argue this is a breakout move.
Well, when you see gold jumping up almost 4% in a single day, you know, that's a little bit out of the ordinary, I would say. And so it makes a lot of sense. And GLD is a great venue, you know, for people to choose from that they want to try to trade gold in the way that they can. And it's obviously the options world. They're on fire with this. By the way, last Friday, 80 plus million contracts trading where you're sitting, you know, one of the places is where you're sitting, but in the options world, 81 million contracts trading. That's not the highest ever, but when you look at January and you look at the fact that we're averaging somewhere close to 68 to 70 million option trades per day, it's just amazing. And you are in the right place, my man. You are sitting right there at the Cboe, and you're seeing
they're popping
options
today.
trading like crazy. It's great.
No, there's definitely some action here. Finally getting some volatility to move. The question, I guess, if we're thinking about kind of the larger portfolio strategy, Pete, is, you know, do you think that this is telling people that they should own metals as part of their main kind of strategic positioning? I know that obviously we're talking options. We do a lot of trading on that. There's exploitative moves that have been in this market to capture some of these big swings. But I wonder if people might also want to start thinking about this as just a section of their portfolio to hedge out, you know, maybe where they used to have bonds, which is what everybody's been vying for, right? The gold bugs have been vying for it, the crypto, the options traders, the private debt markets, everybody's vying for that bond side of the portfolio they say is broken. And today's one of those days where you're like, all right, if I owned volatility, I would have been happy. If I would have owned gold, I would have been happy. Not so much sure about some of the private stuff, but what do you think?
And if you owned silver, you'd be damn happy.
That too, yeah.
I mean, these moves that we are seeing and the options that are there, and Oliver, I'll be very candid with you as far as like those options. Most of those are in the form of spreads. And why do I bring that up? Because it's important, because they're not expecting just an absolutely incredible move, at least not at the moment. They're looking for moves that are going to start chopping and start this move that keeps on moving higher. That's exactly what we are seeing in gold. So it's not that they're nakedly going out and buying 100,000 options. They're going out, they're buying the 440s, and they might be selling the 450s or the 455s. I mean, each trade's going to be a little bit different, but depending on risk and what people are looking for. But there is an incredible appetite, is the way I would phrase it right now, for both silver and gold. You can even throw in copper to that same, group or whatever, because that has just been on the rise, and we all know that. But it's just really been a silver and gold sort of a magic time for them, and it's been going on for a while. This isn't something that just started a week ago, a month ago, or 2 months ago. This has been going on for quite a while, where the buyers have just absolutely gone in and continue to come into GLD on a daily, weekly basis. It's amazing to me.
The Burl Ives trade, as you put it, lives on. Pete, are there any dips you like today? Is there any stuff in the tech world that looks good to you? We've been talking a lot about, the silver and the gold trade, but also, something to be said about any of the tech stuff that's been either sideways or breaking down. Anything there that looks juicy to you?
Yeah, I do look at some of the various names, and I look at something like NVIDIA. Why are they down 3+% today? Well, they're down because of what has happened essentially overnight, that the Chinese have said, you know what, maybe we don't need those chips, the million chips that they were going to send over, the H200s. I think that gets resolved. I hope that, for their sake, that can get resolved, and I think that it will be. I think this is something of they're playing some sort of a game. But so that one becomes interesting for sure. And I'll tell you, people that are loving the AI world and want to be exposed to that, there's a number of different names out there that just continue to be very, very strong, and it's incredible. But take a look at Intel, take a look at Micron, take a look at Marvell, take a look at Seagate, and some of these names, Western Digital. These are names. Good. These names are names of the past, but you know what? They are not in the past. They are in, and they are right there where we are. So, if you want to get away from NVIDIA because you're a little bit scared about what's going on with the Chinese and so forth, I get it. But when it comes to these names, they are absolutely on fire, and they continue to be on fire, and we continue to see option activity in those as well.
It's a really good point that the recent tech winners still look quite strong. Western Digital, Micron, we talked Intel as well. And pretty impressive that those have held up today, and the market is not going for recent winners to take profits. They're more interested in some of the mags, which have been flat.
Right.
Rather than, ripping like some of these others have been. Pete, before I let you go, we got Chris Brecher on deck, but let's talk some football real quick. A little bit sad, but, that's the name of the game. My Bears bet on that 8% or whatever didn't pay off, and now we are left with Kalshi saying that the two most likely scenarios are New England and Seattle, and New England and Rams, which is kind of interesting, because then if you go to the team most likely to win, Kalshi's got it as Seattle, even though, obviously New England's in here twice. So I guess people just think New England looks great for their division.
Well, when you look at what happened between Seattle and LA, and by the way, you've got to be impressed with just the sheer fact that these are two teams from the West, along with the 49ers who were in there until they were beat. And they got beat primarily because they were so hurt. Their defense literally had 7 guys on IR, injured reserve. So that made it very, very difficult for them to be able to do much of anything. They didn't do much of anything, and Seattle beat the tar out of them. But that Seattle team is really good. Their defense is outstanding. The offense does an amazing job. They run the football really, really well. So, I look at Seattle and I think, well, the Rams, I think, are an outstanding team, great quarterback with potentially an MVP type of a year. But I still kind of lean towards Seattle. They split during the regular season. I think Seattle takes them out. But the one thing that is a little bit scary is what's going on with, Denver, and the fact that they've got a different quarterback because of the fact that their quarterback, Bo Nix, broke his ankle the second to last play of the game, which is unfortunate. Wow. So there's a lot of things going on out there. But if I had prediction right now for the Super Bowl, in my mind, it would definitely be Seattle. And then I think you've got to go with New England. New England is really pretty special. And I'll tell you, Drake May, he looks like, with his helmet on and everything, he has a Tom Brady look to him. He's about 6'5". He's about 235 or 40 pounds. He's a big guy.
Big dude. Yeah.
He's got a cannon for an arm. I remember him at North Carolina. He's a heck of a player, and this is only, his second year, I think, in the NFL, and he looks like a veteran who's ready to go to quite a few Super Bowls, I think, in the future.
You know, obviously the Bears story would have been nice, but I gotta say, just the permanence of New England as an NFL fixture is also a pretty amazing story. I mean, to just rebound, be right back in the running for the Super Bowl again here. So it looks like a deep underdog for Denver right now is kind of the main point, and the Rams as the highest odds right now on Kalshi. Great stuff, Pete Najarian. Good to catch up. You the man. Thanks, sir.
You are the man. Appreciate you, Oliver. Have a great day, man.
Fun chat. Pete Najarian,
Thanks.
co-founder at Market Rebellion. Gonna take a short break. We got Chris Brecher on deck. I think he was in the pit behind me or somewhere around here with one of the Najarians back in the day. Joining us next is we'll talk some of the small caps, a few other trades to watch. We're going to take a look at the chart of Tesla before we head into the bell as well. We got about 29 minutes here left until the session closes out. Stocks still just having trouble. S&P 500 really at the lows of the day. We're talking low lows of the day right now. Desperately trying to hold on to that line I drew at the beginning of the show, but it's not going great as we are just a tick off the lows of 67.92 for the index. So buckle up. Might be a little bit of a ride here. Be right back.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovator's floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
There are two things about Chicago finance you can't get anywhere else. The first is kind of hard to miss. Everyone's trading options. Cboe is on a 5-year growth streak making billions, and its goddess of grain sits atop the final pit of open outcry. And that's what it's all about. The chance to fend for yourself. A fortress for the self-made trader, and the only still standing in America. The second thing you may not know, but it's worth trillions. Chicago is the only major city in America that's home to 2 of the top 10 registered investment advisors, according to Barron's. That means a steady river of passive money and fixed income pouring into the city. If you think you can beat the market, this is where you do it. If you've got value, price will discover you here in Chicago, the future of finance. Join me, Oliver Renick, from Cboe, Tuesday, Wednesday, Thursday, into the closing bell, live from Chicago. We're back here, and the stocks are just barely hanging on by a thread at the lows of the session. Equities are definitely in some trouble here as we get the first major hit to the S&P 500, but also just continuing general weakness from the NASDAQ. Right now, the NASDAQ at 25,131 in futures. If you look at stocks like Nvidia, they are really flirting with important lines on the chart. Nvidia at 178 right now, still above my line at 170, but just not looking great generally throughout the suite of big tech companies. So VIX sitting, though, still below the highs of the session. A creep up over the last 12 days indeed led to a sizable pop here, but we have certainly recently also seen bigger spikes that we went through. And I might also remind that it was just, 2 years ago that we had a big dramatic blow-off move around Japan's economy, and that was a dip to be bought as well. At the time, I wrote Chris Brecher that it wasn't the end of the world. What's up, Chris? TradingNest.tv, good to see you. Welcome back to the show.
Hey, thanks. Thanks for having me on. I traded with Pete's brother for a long time.
John?
We were in the IBM pit. In fact, so I remember when Pete first went to the floor from football, so I was scared of him. But
yeah, intimidating stature, no question about it.
yeah, and yeah, I've what we were looking at in the markets in here was the warning signs. So I know everybody's talking about Greenland and all that, but I'm looking more at the reaction. This is what your analyst from Piper Sandler said.
Yeah, Danny Kirsch last week. Yeah, exactly.
Yeah, it was about the bond market. Luckily,
Yep.
I didn't fade them.
And
but
Noel Smith as well mentioned HYG puts. Sorry to jump in front of you, but that was just another one. You know, he was saying hedge the market with HYG puts. So even though the credit has come back today, it did get hit here as yields spiked.
Yeah, is definitely any kind of uncertainty, affected. And I see it with the Russell. Is the Russell has acted great, like we talked about. And if my camera is delayed, I can try to go to a different camera.
Oh, you're good.
Or is
You're
it
beautiful.
okay?
Yeah, you're beautiful.
Okay.
And by the way, the Russell is too.
But
you know,
I was
barely budging, just back to where we were 3 days ago for IWM.
Yeah, in fact, it was almost up this morning. But now I'm looking at the correlation. If you put up a 50 moving average and a 100 moving average of major indexes. So if you want me to share my screen, if I can, I'm happy to.
If it's going to show up on yours, I can take it full. Yeah.
Let me see if it works. Let's see. Let me see which one.
I'm also pretty versatile over
There.
here if you tell me what you want to see. All right. Yeah. Here, let me take you full. Okay. Cool. What are we looking
Oh,
at?
cool. So the blue line is the 100.
Okay.
The dotted line is the 200, not even close to it. But I don't look at it. I know in here it looks like hindsight. It hit the 100 and rallied, and people say it's support. I'm looking at it in relation to other indexes. So when I go over here, and we can take off the MACD on the bottom, I use an oscillator, the 31016 MACD. That's what Linda Bradford Rasha used, and also a old service we used to use. Use the 31016. You can use any oscillator.
Okay.
It's just an oscillator to me. If it's overbought in a downtrend, it's a lot different than overbought in an uptrend. But I'll take that off right now because all I'm caring about is indexes in relation to each other. So when I see on the, and usually the NASDAQ or the Russell lead, this time it's the NASDAQ. So the NASDAQ is woefully underperformed.
NASDAQ's been the weakest, 100%.
Yeah.
Right?
And as you see, now it's at the 100 SMA. So, and as you see on the left, the ES isn't there yet. In fact, yesterday was why we came in short the ES over the weekend, because the NASDAQ had already plowed under the 50 and under the 20, and that meant it more likely that this would go to the 50. Now that this is at the 100, it's more likely this goes to the 100. They usually move together.
Okay.
And so that's...
I think this speaks volumes, to be honest, because it could just be some kind of internal rotation in the market that doesn't have to be, panic. That being said, though, if that NASDAQ chart breaks through your long-term support line, it might get a little hairy.
Yeah, but right now, it seems to me, I know everybody's talking about Greenland, but to me, it's really about the bond market breaking down. And that not only is the bond market breaking down, and a lot of people saying, they want lower rates. Well, the problem is that makes the yield curve steepen because it's inflationary. And if you don't think it's inflationary, here I like to look at the Dow Jones Commodity Index, up 17 today. In fact, if you look at the Dow Jones Commodity Index, which includes oil, if you go to a monthly chart, check this out. There, it's at a 4-year high.
Okay.
So when that goes up, long bonds don't like it.
Okay.
And that's one reason that we thought that head and shoulders on the right would break down. So because the higher the commodities go, the more likely the long bond's going to go down.
Now, the potential for the head and shoulders, when it's realized, take me through what the target for that might be there. Because you're looking, and by the way, you're looking at bond futures, right? So I'll try and kind of translate on what that might mean for the 10-year yield. Yeah,
let's tell you. Well, the 10-year, is going to be a little more influenced by the Fed policy, but I look at the 30-year just for mortgages, and also when I was on the floor, even in 1982, everybody's like, "Look at the bonds, look at the bonds," and we always were looking at the ZB. And in fact, what a lot of people miss, they think Reaganomics in 1980 that the markets went straight up when Reagan was elected. They went down for 18 straight months because that's interest rates were so high. So actually, SPX, there were 3 factors that made it have a secular bull market. It started in 1982, August. I was on the floor as a clerk in the Cboe, actually. And what happened is 3 things. One of them is Greenspan said they've conquered inflation. Right there. Yeah, I was right there, August. So Greenspan cut rates, so obviously that helped. Number 2, the S&P pit started. The big futures started, the SPOOs. So, and the first one was for September, so that's why it's called SPOOs for the U. But that meant that it was real easy to manipulate markets by buying baskets of futures instead of having to buy billions of stock.
Got it.
And that started in 1982. And the third thing was that was the year the SEC allowed buybacks to begin.
Okay, I like that. That's a nice little context. Good historical lesson there, Chris. Okay, so it sounds to me like you think that the move in bonds could be real here, that maybe you continue shorting from here.
Yeah, and to answer your question, I wanted to go back to TradingView to show more clearly. But here, just so you know, it doesn't go back, ZB, back to 1982. But the bonds exploded in price. So, I mean, I got my parents in a money market when I worked all of 3 months at Merrill Lynch before I went to work for that boiler room I told you about. And we were getting 20% in the money market. So there was not a lot of incentive to go in the stock market. So when Greenspan cut rates, that's one reason the markets exploded.
Right. All right. So do you think that it's going to be correlated? As yields go up, do stocks go down? And so do we combine those trades, or do we try and stay long stocks and then maybe just go short bonds as a hedge?
Well, the thing is that I've been seeing is the bonds need to go down enough where people think, hey, why not put my money in bonds and stocks? What's been happening in the last couple of years, like you've seen, heck, you make 50% in NVIDIA. Who cares if a bond's 3 or 4%?
Sure.
It's just when things start rolling over, the perceptions change. The big difference today, and one reason the ES hasn't rallied at all, is the slope of the sell-off. Those big old slopes down, and the Japanese bond market did the same thing. That always spooks people. And to answer your question of where it could go, well, the first thing is when I see a head and shoulders like this, right there. The first thing is, where's the objective? Because a lot of people talk about it's the width, but it's also about the support. So if there's no support underneath, that expectation can be reached pretty quickly. But if there's a lot of support, you get this futzing around right in that support like you've seen. So now you got a little bear flag here. So ironically, it stopped right at that support. So if this doesn't hold right in here, I think you're talking about the lack of support into that 112.5.
All right, well, that could be pretty nasty. Okay, so short bonds sounds like our core position. Chris, tell me about what you think looks, is there anything that looks strong? Is the Russell the strongest then? It sounds like if I combine what you're saying, then maybe I stay long IWM or have some kind of long IWM short NASDAQ trade and then pair with maybe short bonds. Is that the package, the total package, the way you see it?
Well, what we were doing is actually shorting the IWM like on Thursday. And the only reason is that correlation. Okay. That probably I'm a broken record about this.
But when I saw IWM right now,
is when I saw this, and I'll erase some of the drawings. And if you look at the Russell futures, they were only at the 9 moving average, not even close to the 20, while the NASDAQ is almost at the 100. So massive divergence. So actually now I'm starting to look long NASDAQ stocks and short the Russell, doing the total opposite.
Okay. All right. So flip it around then.
Yeah, I'm not sure which NASDAQ stocks I want to buy. I'm happy to show you the support I'm looking at.
Maybe real quick, yeah.
Sure. The way I look at it, on the way down, it's more animal spirit. So I don't care about the moving averages as much. I care about price. And the more, just basic stuff, I'm a pretty simple kind of person. The more prior tops, the more that support. So that's why in Google, we were looking at 2 lines of support. We were looking at this right in there, that area. And then this area is a lot, major support, right in that 318, right in there. And so somebody in our chat was actually on the first spike down, was selling out of the money puts, way out of the money, taking advantage of some panic on the opening. Okay. For me, this is where I'd look in that little area, that little air hole. We call it a path of least support, like an air hole. In that area, I'd look to sell like the 305 puts naked.
Okay.
In that area and short the IWM.
So, all right. So pair it. All right. So you take a long position in Alphabet to by selling downside puts, and then pair it with a maybe a short bonds trade and maybe a little fade in IWM. I'm hearing you right. That's a nice little package.
Yeah, actually in IWM, we did this. We just went in and did butterflies because so it's like a horror movie. You know the bad person's coming out. You just don't know from where and when. Mm-hmm. So what we did is we went far out to February 6th and just did a butterfly under the market, like the 260, 270 butterfly was under $3. It's not the best in the world so far because the vol's gone up. So, this right here has not gone up at all because the middle strike has exploded in price. But this is a nice hedge. So, to me, if this goes up 3 points, the middle strike will really die.
Okay. I like that. Nice. Little hedge there in the I like the IWM paired with the bond trade too, I think in particular. Good stuff, Chris.
Yeah,
like the ideas, and I like
there's one
the macro
thing
take too for bonds. Yeah, hit me real quick. I gotta jump.
Thing a lot of
real quick,
people
Chris,
are missing. Sorry, Oliver.
Yeah.
Is lack of buybacks right now. So we're in the buyback blackout.
The dark
bad
zone.
News is more likely to wall up the Googles of the world temporarily.
True. Google has been kind of the favorite among the mags, so anything that breaks down for Google would be definitely bad news bears. That thing has been just impenetrable, essentially.
Did you really say bad news bears? I'm still hurting about Caleb Williams' interception.
Man. I know. Rough. Hey, you live by the sword, you die by the sword. On one hand, you're throwing off your back foot, running backwards. And then the next, series, you're kind of pushing it to where maybe you don't have to, where you just creep up the field. I know. I'm with you on that one.
I didn't understand why they just didn't do a run every play, just a run, because it's sort of like
all they had to do was just creep in the right direction.
Get closer,
it's doesn't have to be glorious. Just get us 3 points on the board.
It was a sore subject. So and then Miami loses. So because I'm from Florida.
All right, we're gonna have to get you on the gamble hit next time, Chris. You the man. Thank you, sir.
Well,
Good
thanks for
charts.
having me on. Take care.
Yes, sir. Chris Brecher, TradingNest.tv. Let's come back and talk what I think is one of the most important charts in the market, almost always, but particularly lately because the stock has been a standout, but then unwound now basically in 2026, and that's Tesla. I got my man Joel Hawthorne coming up after the break. We'll be right back.
With increased volatility, investors are bracing for large market moves, both up and down. Will the market rebound 30%, or will we see a 30% drop? At the end of the day, uncertainty remains a constant. Innovator's floor ETFs are designed for volatile markets. They aim to position portfolios for market moves regardless of direction or magnitude. They are intended as a core equity solution, providing exposure to U.S. equities with built-in downside protection, seeking to deliver more than 70% of the upside and targeting a max loss of 8 to 12% annually. With specified levels of sought-after protection and upside participation, we believe the floor ETFs offer an evergreen strategy designed to allow investors to remain invested regardless of the market's direction.
All right, welcome back to the show. Here we got stocks that are looking like they're going to soften up a little bit again. S&P 500 and down, and VIX moving higher. Right now, the S&P is punching to new lows of the session. I got Mr. Joel Hawthorne joining me. My main man in Chicago, professional trader. I know you've been looking at Tesla charts. I know you've been eager to try and get a dip to maybe get some action on. Joel, unfortunately, as we head to the close here, we're about to print new highs for VIX. It seems like if we're going to fade any further.
Hey man, yeah, thanks for having me today. Appreciate being on.
Always a pleasure.
Today,
Happy New Year.
Yeah, Happy New Year. Absolutely, Happy New Year. We got to catch up. I think today, man, overall, I was looking for dip buyers to possibly come into this market. There were some key levels I saw in E-mini futures overnight that I thought maybe would probably want to retest to the upside, perhaps. But I think right now, man, I think there's just from a technical level, I know we're talking about a lot of political events, but I think just right now, this market has really needed some downside, some pressure to the downside, and we haven't had any significant pressure to the downside for quite some time. So I think overall, as we are looking, as the market is the bell's going to ring in about 5 minutes, VIX structure today seems that we may have more room, more vol and more room to the downside, perhaps. However, I do want to keep in mind, though, 6,800 in E-mini futures will be a level I'll be watching overnight tonight,
Okay.
because that's a level that I think could be a significant support level. And if that happens, maybe we bounce there, maybe not. It's going to be a long evening, though. I think a lot of people will be watching futures overnight here to see how we open up in the morning.
Throwing on a little chart here, I can definitely see where 68 was a place for a few key moments in October. It was a place where the market stalled out, looking at the ES futures chart before dropping pretty substantially. And then it was support in December before we ultimately did put in a fresh new high. So I can see where
Absolutely.
maybe we just kind of need to go kiss that and then revisit and figure out what to do
Maybe,
next.
and if we cut through there aggressively, I would probably be looking somewhere along the lines of about 67, 70-ish area for futures as well. So
Okay.
things could get ugly if those levels don't hold anytime soon.
I mean, hey, the way this is going right now, 4 minutes left, we might just get there by the end of the session. VIX has been creeping for basically a month and then finally popped. You know, it's important to remember that, you know, late last year we had VIX 28. And then before that we had, you know, a test even closer to 30. Then, of course, in April, with the tariff dynamics and real kind of tariff terror, we had this massive, massive surge. By the way, given the context of things we're talking about and people discussing the Japanese yen and all that, it was summer 2024. There we go. It is, right? When we got VIX 66.
Yeah.
So,
yeah.
you know, I would say that given the last few years of geopolitical uncertainty and a lot of words exchanged and fear and volatility premium bought on these things, you know, this is kind of like a cakewalk so far.
I agree with you. I was anticipating possibly getting, maybe I thought we were going to get a bit of a vol push for right around April or so. And for us to see it right now, right out the option expiration on last Friday, coming in on a shortened week, I personally was flat coming into the week because I just thought, who knows, right? I didn't know if any headlines was going to push the market higher, or even if we were going to just kind of have a day like today. So I came into the day completely flat as far as day trades or short-term trades go. But as I look at the day to say set up right now, one thing that I've noticed is that anytime we've had a bit of a pop like this, where right now as of late, where we're trading right around that 2059 number in the VIX right now, it'll be interesting to see if vol collapses tomorrow and does dip buyers make a push forward. We talked about Tesla earlier briefly, and it's one that I've been watching because I really thought that that 425-ish area price level was going to hold as a support level. But with so much pressure to the downside today in SPX and in E-mini futures, Tesla just didn't stand a chance. And so because of that, we're trading right around 419 or so going into the close. But there is a lot of volume right around the 420 strikes that expire this week and the 430 strikes that expire this week. And now those are calls that are moving now. Granted, that could be some pressure to guys selling calls and obviously being bearish. Directionally, not seeing that bias as of right now as I'm looking at the chart. But, I do think that if dip buyers do come in, could this market be singing a different tune come right by the end of the week? Could buyers be back in control? Absolutely. And if so, look for a lot of these names to really get pushed back to probably Friday's area. So
that's kind of my gut still tells me that there's going to be some eager dip buyers, but to the point of the S&P and Tesla, there might be clearer opportunities just a little lower. You know, like the 400 looks like a pretty important line for me for Tesla. But the fact that this was making highs, you know, at the end of last year, it does seem to be like it should be an important one to watch. And by the way, right here at 422, 420 as well, I think is also an important line. So, I mean, I think if this thing shows life, then that's a good message that the broad market could too. Give you last thought here, Joel. We did finish up the session at the lows.
Yeah, definitely. I will say this, and I know you know this. Uh, we know the narrative on Fridays, man. Fridays for names like Tesla, the zero DTs come in, big gamma moves. We could see here right now being down 4%. We could very well be up 5 to 7% on this Friday if the bulls come in, and it wouldn't shock anyone, especially in a name like Tesla,
Yeah.
because we know there's a lot of money. It's one of those names that are one of the most active names daily as far as option volume goes, and it'll be everyone will look at this as a deep discount. So one that I've seen recently as well, and I know you and I haven't chatted about it, but Micron, man, that one today, even when the selling was going on,
Yep.
Micron was being very resilient early on. That's one that definitely another one that could see more momentum to the upside as well.
Micron, Pete mentioned to us Western Digital, Intel, a lot of these still real solid recent winners. They didn't come for those, which is, I think, important that some of the stuff that's been working very recently, held on today throughout the session. Love the Tesla chart, like the S&P thoughts. Thanks for taking us to the bell, Joel. Good to catch up.
Absolutely. Thanks for having me.
Yes, sir. You're very welcome. Hopefully Tesla shows a little bit of life, and then we can maybe get a little bounce, but we're going to have to settle what happens in bonds over the next couple of days. See if Treasury yields cool off tomorrow. Thanks for tuning in to Chicago Future Finance. I will see you 2 p.m. Central Time tomorrow.